Afternoon, ladies and gents. Very, very warm welcome to the Foreign Correspondents Club. Thank you very much for coming out to see us today. We've got a very short title for our presentation today: the Australian Tax, Investment Opportunity and Superannuation Presentation. Very snappy and short, yeah, indeed. We've got three speakers for you today. First of all, we've got, many of you know him, Paul Gambles, the CEO at MBMG Group. Now, Paul's going to be giving his views on the Australian economy. Ordinarily, when Paul does this, we ask that the venue provide plastic cups and remove all the knives. But today they haven't done that, so please refrain from throwing anything at Paul while he does his presentation. Next up, we've got John Pegg, who is the principal at Principio in Australia. John's going to be giving an overview on the budgetary changes in Australia, what the Australian government is essentially trying to do to combat all the bad things that Paul is going to talk about. And finally, we've got Scott Douglas. Some of you know Scott from his visit a couple of months ago, but Scott Douglas is the CEO of Identity Wealth Management, a company we work very close with based in Australia, and Scott will be talking about what the budget changes actually mean to expatriates who live away from Australia. So things like if you own property, superannuations, etc. If I can respectfully ask each presentation to try to keep to about 10 minutes, after which we'll have a question and answer session. We'll give some good time before everyone needs to go back to work. So without further ado, I'll hand over to Paul Gambles. Thank you.
Thanks, Todd, and thank you everybody for coming. As Todd said, I'm going to be focusing on the investment and economy part of today's sandwich. I think we regard John as being the sort of substantial filling in the middle of the sandwich, so I'll try and get through mine as quickly as we can. You may have seen this gentleman. He's been in the news a wee bit lately, and the main reason why is that he told his boss and he told everybody else in Australia that he was going to end up with something like a $1.5 billion budget surplus for this last year. Unfortunately, he's clearly not very good at maths, because he ended up with a 19.4 billion deficit, or 19.4 billion loss. So his boss clearly wasn't a very happy lady. Being a politician, she obviously felt the need to say something about this. Now, to this day, I don't really quite understand what she was trying to say. And I initially wondered whether that's because I'm a trained economist and it didn't make sense in economic terms. But as far as I can tell, nobody could actually understand what she was trying to say to us. But it seems to boil down to the fact that if Australia keeps borrowing money at a crazy rate and it changes the name of the country from Australia to John, then everything will be okay. That seemed to be her answer to it. Now, there's somebody else who's also been in the news quite a lot lately. A few weeks ago, I was on CNBC and I was asked about the Australian dollar, what the outlook, what the prospects were, and at the time I pointed out that to me, Australian dollar looks incredibly expensive. It looks very overvalued. We're due to have, at some point, probably in the next 18 months or so, a very big correction in the Australian dollar. That's obviously big news for anybody who's connected with Australia, particularly for expats who are living overseas. And it seemed to be big enough news that the Sydney Morning Herald, the Brisbane Times, was it the Melbourne Age, the Canberra Times, all seemed to have decided that I was public enemy number one. But luckily, I didn't have to stay up there too lonely all on my own for a while, because reinforcements came in, and there's George Soros, and there's a guy called Bill Eckhart, who's one of his other hedge fund friends. They came out and said the same thing that I did a couple of days later. I think they just let me take all the flak for it, and they came in and started making a lot of money out of it. There's a lot of reasons why the Australian dollar looks like a very overvalued currency at the moment. I'm not going to go into anything too technical today, but I think everybody understands the commodity story. Australia is an economy that's largely driven by resources, by exporting resources, and if you want to start getting technical, lately we've seen a 0.68 correlation between commodity prices and the Australian dollar. What that really means is when commodities are doing well, the Australian dollar is strong. When commodities are doing badly, the Australian dollar is weak, and that's something that's become more and more marked over the last few years. That's not actually the only problem. That's not Australia's only problem. In fact, Australia's problem really is entirely down to how successful it's been. History shows us that no economy, it doesn't matter who you are, no economy can remain permanently on top or permanently successful. It just doesn't happen. One reason it doesn't happen is you start to become a victim of your own success, and that's clearly happening to Australia. I'm not sure how well everybody can read this chart, but there are 4 metrics that have been used to try and measure just how expensive it is to live in Australia right now. One of them is a metric that a lot of economists use called purchasing power parity, which is essentially a real equivalent. How much can you actually buy with how much you make? The second one is a thing that the economists have used for years, which is a thing called the Big Mac Index, where they actually do go around checking the price of McDonald's in different countries around the world, and that's actually been one of the most accurate ways to detect whether currencies are overvalued or undervalued. It's been much more accurate than a whole bunch of scientific methods that economists like me might use. So Big Mac Index is actually something we need to listen to. Obviously, the problem with the Big Mac Index is we needed something more broader and more diversified to help us understand whether currencies are overvalued. So the next one is the Pizza Hut Index, and again, by that metric, Australia is also incredibly overvalued. And I thought, just to put in something that I actually thought would resonate particularly well for an Australian audience, we've also got the beer index in there, and with all of those factors, Australia actually looks like it's in 3 cases the most expensive and therefore most overvalued, and in the other one the second most overvalued metric or most overvalued currency in the world. Another way of looking at it is if we look at Australian real estate, 2 of the 5 most expensive cities in the world to buy or to own property happen to be in Australia right now, which, you know, if you think about Australia, yeah, I know that, you know, population tends to move out to the coastal regions and that is limited, but, you know, Australia is a pretty damn big expanse of land for about 20 million people to live in. So for Australia to be the most expensive real estate in the world is a little bit worrying. So another statistic that came out at the end of last year is Australians are now actually the most wealthy per capita of any nation in the world, and that's happened over the last few years. And it's not the first time. We have actually been here before. In the 1880s, and I wasn't around at that time, just in case anybody's asking, but in the 1880s there was a massive gold rush. There was a sort of Australian version of Klondike or California, and at that point, by the end of the 1880s, Australia had again become the wealthiest and the most expensive country in the world at that stage. What happened as a consequence of that was an enormous correction had to follow. You can't simply get, you know, more and more expensive all the time without consequences of that. And we've listed up there 5 of the things that happened following the 1880s boom. So the federal bank ran out of money. The commercial bank ended up closing operations. 12 smaller banks ended up closing down. Anybody who had money on deposit wasn't able to get that back out of the banks. Credit and the whole economy basically froze up. I'm not saying that we're quite in that situation again, but that's what happened last time Australia was at a comparable position of strength. Some of these charts here actually show the boom that happened during the 1880s and the bust that we then got into afterwards. So we can see, you know, if we compare Australia to the UK during the 1880s, a massive gap opened up. What was then, you know, relatively small colony suddenly became hideously more expensive than what was in those days the seat of empire, and that gap was just unsustainable. There are other indications of basically the same thing. If we look at economic growth, Australia was booming during the 80s, had absolutely massive economic collapse in 1890 that took quite a few years to recover from. The good news is all this stuff is cyclical. Obviously Australia did recover, But I think, if we're trying to look for any kind of precedent in history for where we are now, then 1890 is probably about as good a starting point as there is. So I mentioned property prices earlier, 2 of the 5 most expensive cities in the world. One thing that economists like me tend to look at is how much we think a property should cost, okay? And we'll look at long-term data. We'll look at, we'll try and resize it for any particular economy. So for Australia, we look at property prices relative to Australian GDP. If you look at that chart there, the line that just goes up absolutely stratospherically in 2000 is basically Australian property prices getting more expensive relative to Australian GDP. Historically, whenever we reach the dark blue dotted line going across the middle of the chart there, historically that's the point where houses just get so expensive they can't go up anymore. There has to be a correction. Property prices have to fall. They're just too expensive relative to the production, the output, or the GDP of a particular country. They're unsustainable. Well, we can see what happened in 2005. They didn't crash. They were supposed to crash, but they didn't crash. They've actually gone on way above that. They're now at a level that economists would refer to as being about 7 standard deviations above the average. And what that means is they're more expensive as an asset than any other asset just about in the history of the global economy. Relative to where they are and what they are, they're completely off the scale in terms of the price that they're at. They're, in real terms, they're probably something like about 60% overpriced. And I think if we want to look for the causes for that, we don't really have to be too creative or too insightful. This chart here shows that that rise in Australian property prices has basically coincided with a pretty well equivalent rise in Australian household debt. So how much debt people take on board relative to the income they've got pretty well tracks perfectly how much Australian house prices have gone up. So the thing that's created this extreme situation is basically an extreme amount of household debt. One concern that has for us is not only do we think the Australian currency is going to have to correct at some point, not only do we think that Australian property is going to have to correct at some point, but also that's got implications that will have spillover into wider economy. Australia's banks, the 4 pillars, I think they're under a lot of pressure right now. Until recently, they were sort of regarded as being something very special and almost, I guess, sacrosanct, whereas now there's a lot of talk about what's going to happen to the ratings of the big 4 Australian banks. And I think if we get into a situation where anything happens in the property market, the Australian banks are going to be taking an awful lot of pain. So, having depressed you with all the things that face you, I suppose there are, can I give you any answers? Well, I guess there's a couple of things. One is if you believe that by borrowing a lot more money and by somehow following this parable about this guy called John, that is going to get us out of it, well, all you need to do is go and tick the voting card later this year. If you don't think that's going to work, I'm not sure that putting a tick anywhere else on a voting card is going to make a lot of difference. It may avoid some of the more stupid things that are currently being proposed, which John and Scott are going to tell us about. But I don't actually think it's going to make that much difference. I don't think this is something we can necessarily pin on one politician or one political party. This is something structural. It's something fundamental. It's something that's been created by the success that Australia's enjoyed for the last few years. So I don't think she's got any answers. This bloke seems to be all over the press right now, so maybe if you want to ask me a few questions from the floor after these 2 gentlemen have spoken, I'll try and give you my answers. But I think the important thing is to be aware of dangers that are facing the currency, dangers that are facing the property market, and dangers that are facing the general economy. And with that, I'd like to hand over to John Pegg. Thank you, everybody.